US dollar Canadian dollar moves above 100-hour MA. Can the price stay above the MA and give the buyers hope?
Yen outperforming G10 currencies, Scotiabank.
Pound sterling trades firmly against US dollar as Trump assaults Fed's independence. IMF cuts 2025 global growth forecast to 2.8% from 3.3%. United States Redbook Index year over year up to 7.4% in April 18th from previous 6.6%.
US dollar Canadian dollar dips below 1.38 remain well supported, Scotiabank. US dollar steadies undertone remains weak, Scotiabank. At least we got the terms of reference to lay down a roadmap for the negotiations. Euro US dollar retraces while doubts over US dollar's credibility keeps pair on front foot. US dollar bounces higher and looks to erase Monday's losses. Silly me, I forgot to make coffee. Let me make an espresso. I'll be like 2 minutes. Base, how low can you go? Death row, what a brother know. Once again, back is the incredible rhyme animal. The incredible D, public enemy number one. 5-0 sit, freeze, and I got numb. All right, where are you? Hang on, I got my feet tangled in wires. All right, cool. Now let me get to the software. Where's the software? Now I gotta get to the chat. Almost there. Hang on, boo-boo. Here we are, pulling up the chat. There we go. Now I can see your beautiful typing. So good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, guten Morgen. Comment allez-vous? How are you? Hey, we got a stock market that is opening soon. Do you know if you're a bull or a bear? Well, you should. Let's take a look at the implied volatility. California's up 500 pips on the euro dollar. Good job, Grime. That's a nice trade. Glad you're thinking big. Okay, remember, big in Forex doesn't mean you put in a lot of leverage and put in a huge lot size. No, that's what amateurs do. Getting big means letting your winners run. Small, low risk trades that are worth something. Yeah, cool. So, anywho, good job. Let's zip over to the, what do you want to do? S&P 500 today? Okay, implied 4-hour low around 51.65. 72. 51.72. 51.72. 51.72. 51.72. Okay, now I'm on the right chart. Go 51.72. 5172. There we go. That's the current implied 4-hour low. That's this number here. Okay, the other one is 5198, so that forms a little bottom. About right. Cool. So really what we're using is tomorrow's pivot point. Cool. Cool Modi. Zip over here to the smaller time frame. Okay. Those are our implied lows if you happen to be a bull on the stock market. So, are you a bull on the stock market or are you a bear on the stock market? For today. Bueller, what do you think? Mm-mm-mm-mm. Bum bum boom 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 boom. Oh, you're quiet? You're shy today? That's all right. That's all right. Do 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 do. Glad I grabbed that coffee. Thank you. Okay, look at again. This is the 4-hour implied low. Let me circle it just so make sure you understand. Right, 4-hour implied low. This is the 1-hour implied low. Okay. Yeah, they did hit weekly targets early. Yeah, for sure. So that's where then you back out to longer term. Yeah. Cool. Yeah. Hey, by the way, I'm going to have to make some changes to the prop funding at TRADARS. Just we ran into some legal and compliance issues. I have to make some tweaks. But one of the cool things that I think you're going to like in the new changes that are going to happen is you're going to not just get a rebate at the end of the month based on your trading volume to help pay for the cost of TRADARS subscription. But at the end of every day, you're going to get a little rebate on your spread so that every trade you take is a little bit cheaper. So that'll actually be added to your real money in your account. And the other one, I'm going to PayPal to you. So one will be cash in hand, and the other one will be rebate of the spread back in, or part of the spread back into your trading account in cash. So that's pretty cool. I'm excited about that. So I'm going to update the terms of services. I'm going to update the website. There's some other big things coming in that are you know are going to have to change, but some of those are good. Some are well, law, rules are rules. We have to comply to the rules. But anyways, that's nice, right, Mike? A little rebate on the spread. So what happens is every trade ends up being just a little bit cheaper. Yeah. Okay, how far are we from the open? About 2.5 minutes. IFM cuts IFM cuts global growth forecast for 2025 to 2% from 3.3%. So no real news on the calendar today. Uh, Next big event is news out of Australia, and that's 9.5 hours away. So I suppose non-economic calendar news would be the Tesla earnings today. Probably a market mover, huh? Yeah, there's not a lot of news on the calendar this week. Next week is really busy. Yeah. Next week's really busy as far as event risk and opportunity. I'm going to mark this area here. My mouse. There we go. We are just less than a minute from the open, if my clock is correct. No, we're open. Yeah, we're open. All right. Ding, 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 ding. Ding, 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 ding. Remember, if you're a bull, you're looking for a dip, baby. Okay, there's this, and then there's the ones I've already drawn for you that are based on implied vol, not on technical analysis. So there's the two for bulls, right? The two spots for bulls. Look at that 786 on the green candle. That's where bears will probably try to get back in. But I'm a bull, baby. I'm a bull. Come on now. Is this exciting? Do we need background music? Oh, yeah. Look at that, huh? Yeah. Everybody's getting in the positions. Remember, bears sell high, bulls buy low. Amateurs get run over.
Euro consolidates rally from February lows, Scotiabank. Pound.US dollar consolidates 10-day rally, Scotiabank. Has gold peaked?
Beauty, beauty, beauty. Now you got sort of a trap and break scenario, huh? Oh, for sure. Okay. The volume's trying to find its direction. Yeah. What do you think? Do we get volume on open? Yep, for sure. Oh, for sure. It's great how our implied vol end up also being, you know, the the median and one standard deviation. It's kind of cool. Trying to work its way through. Ho, 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 ho. Wee, wee, wee. All right. Just trapped here. Looking for a trap and break. Ho, 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 ho. Hida boo boo. All right. Approaching to the next level. There will be bears. There will be bears.
Oil prices rise with equities, but tariff worries persist.
U.S. dollar claws back with all eyes on the Fed this Tuesday.
Canadian dollar could see boost as pension funds rethink U.S. exposure, says UBS.
All right. Be ready for them. comes the drums. Still heavy volume. All right. If there's a bunch of stops there, that'd be epic, right? But I think there are entries laying up there, not stops. Boom. Boom shalakalaka. Okay. Very nice, huh? What do you think? Let's take a look at the implied high. Where did I put my database? What did I do? Oh, I have it on headline radar. Let me switch it to the vol radar. Let's take a look at the IB. Now the 4-hour high. Where's that? 52.65. Maybe as high as 53. So what we want to do is 52.69 to 53.06. So 52.70, 53, let's just say. $52.70, and then the other one was 53.06, I think. $53.06. Let's see where that takes us. Sort of up in that zone, huh? Let's go way out to a 5-minute chart. And if we were using tomorrow's pivot points, our target would be there. Okay. But look at this, using today's pivot points, we have a bullish buying zone here and a bullish buying zone there, which is not too different from our implied 4-hour low. And the target on that, where is it? Is our daily target right there, you see? So there's quite an overlap. Like it's almost, look at this, 53.06, 53.06, and then we go back to here, 53.06.30, and this is 53.06.71. It's pretty close. 0.4 difference. Yeah. Oh, baby. Oh, yeah. There's our breach. So, yeah. Shorts are being squeezed. You're thinking, why would anyone take a bearish position on this trade? Don't think that way. Don't think that way on that. People are doing what makes sense for them. Okay? So think of it as, let's say at the market open, could somebody that wants to get bearish, remember, if they want to get bearish, wouldn't it be logical for them to look at the current high on the open? Just like where would a bull buy? So, right? Like I've already highlighted that for you. So obviously that's where a bull would buy. And a bear could sell here. Now, it's just an open trade. They might just want to be short and they have no intention to make money today. That might be a swing trade. It might be a day trade. It may be a market open trade. It might be a position trade. It may be just whatever. So there's no right or wrong, right? So like, let's say on how, if you're a bull on this, because you're like, well, I can't even see why someone would short. Don't think that way. Think of it as you know where you would want to buy and you know where a bear would want to sell. You just don't know how many bears are going to sell. Okay? Because you could get one of these things. Yeah. The day could have turned out like this for sure. And what would a bear think? Why would anyone buy it here? It's obviously bearish, right? Don't you know anything about the tariffs and all this? Like it's obvious to them, right? Just as much as this is obvious to you. So just always think about what you intend to do and what other people intend to do. There's no right or wrong because you don't understand. We don't know what their intention is. Right? Things are not all equal. We're not all trading same time frames and stuff. So always just think about like if you were a bear. How about this on hell? If you were a bear and the market rallied on the open, you would want to sell the rally at resistance. Where's resistance? And now you're using different tools to find out where that is. Okay? And then at the end of the day, everything will be figured out if there's more bulls or bears. That's all it is. It's like the number of bulls versus the number of bears. But where bulls buy and where bears sell should be logical and obvious. But we don't know how many bulls will trade today and how many bears will trade today. And that, right? So, anyway. So, I was a bull at the open, and so this worked out well. Look at that, we're losing now volume. Look at that, huh? We're losing our volume. And maybe it's bears changing their mind. Not really sure. Also, I'm not looking at a complete chart, right? Like I'm looking at a 1 minute. I only have certain pivots and all that kind of stuff on it. All right, let's take a look at a different one. Okay. Here's the Dow. I focused a lot on this in our group last night. And one of the things I focused on in our technical trading group. So for those that are not members of TRADARS, TRADARS meets, well, multiple times a day. probably 5 hours a day. But one of the meetings is at the New York Close Asia Open. And so yesterday we were right here, and I made a big stink about that being a possible bottom, and then I connected the old bottom with that possible bottom and saying, well, isn't that interesting? This is a great place for it to turn bullish if it's going to turn bullish. And we're Oscar Mike now. We're on the move, yo. Okay. So now being bullish is a bit late. It's more like, all right, bulls, where do you think bears would sell? Would they sell there? Would they sell here? Okay. And so bulls wouldn't buy now, would they? Bulls would have bought down here. Let's do this in a different color. Bulls would have bought down here, correct? Or down here. So where would bears sell? Depending on the time frame, maybe here, maybe here, maybe here. So where would a bull buy? Let me show you. Okay, based on price action, I would look at that if I were me. Do you know what? I've already drawn all this. I did this last week. Seriously? Yeah, last week, y'all. So let me drag that across. Try to get that level. So somewhere kind of in here-ish. I would also consider this. To me, it's all the same. And then if you prefer Fibonacci, then you'll see that's just basically the 382, 50%. And the next one is a 618, which is basically that monthly pivot or annual, whatever it is. So I would then break this down into digestible pieces if I'm a bull. And a bull would say, plan A looks like this. Okay, plan B looks like this. Done. Chicka, Slim Shady. Up on the open, pull back, second chance rally. So most desirable right now is this. Okay. So if then that happens, then the next leg would probably be downish. And then we are going to then, let's do this in the blue. Look for that. And maybe something like this tomorrow. Okay. Well, the thing is, on hell, what I meant was, we were back here, right? This chart doesn't tell you anything, whether you should be a bull or a bear. Okay? So institutional traders, for example, would make that decision here. So if you've already made your decision fundamentally or technically, but even then on hell, those charts are just for entering trades. They're not for determining, let's say, we'll call it a trend. Okay? So if then that happens, then the next leg would probably be downish. And then we are going to then, we'll call it a trend. And then next leg would probably be downish. 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 And then next Hey, Afro, no, MetaQuote sued me for giving away MetaTrader tools on MetaTraders.com. They sued me. So, all right. So I don't have those on MetaTraders.com anymore. They are a free bonus on InvestorBootcamp.com. And InvestorBootcamp.com is $88 a year, so there's a lot of stuff on there for $88. Okay. So in hell, what I'm trying to say is on an hourly chart, a 15-minute chart, a 5-minute chart, a 1-minute chart, those are just charts for entering trades. And we can disagree on bullish and bearishness, and it's perfectly fine. It's that you're not making that decision on that time frame. So it's more like, Angel, if you are a bear at a market open, then you are looking to sell at resistance. Okay. But nothing on that chart tells you to be a bull or a bear. So like, for example, on this weekly chart, I guess let's back out to a daily. It's just easier to see. Okay. So this is Dow. So I bought the Dow here. Cool. And then I exited way up here somewhere. Okay. So I'm a bull even though I know this market's bearish. That's why I took profit. Okay, great. So now I have choices for re-entry. Okay, Angel? So if I was a bull and I were to look for support, I'd use that pivot point. And I would look for upward motion. The second place as a bull, Angel, would be down here. So that's why I already have these marked. You can see I already have it marked here, and I already have it marked here. Okay? So these are my buying points. Am I right? I have no idea. I just have reason and rationale why I would look for this to turn bullish. That's all. I don't know how many people agree with me. But I do know the price in which I would intend. And that's why they're pre-marked. So in this case, on how I have permission to engage using my logical tools. So I'm backing out here. This is that pivot point. These are those lines. So this whole zone where we're in today and yesterday were my predetermined buying zones from like 2.5, 3 weeks ago. See, an amateur rolls in today and they're wondering what to do. Should they go up or down? I already determined that 10 days ago. So, and I made a big stink last night. That's why I marked it here. And that's why I put this uptrend here. Oops. Okay. In our technical trading group last night. I'm like, this is a place in which I would consider buying. Okay. And I said, I wonder if this higher high will lead to a higher low, in particular around that pivot point. Yeah, no joke. That happened yesterday, 12 hours ago. True. It's a true fact. Cool. All right. So at some point, okay, higher high, higher low, 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 higher high. Is that what's going to happen? I don't know, but there's intention. And that's how you do planning. And so here we are today at the market open, and I'm clearly a bull. and I can articulate it. And then because I'm a bull, I can do things like what I did today. And that was it opened the implied volatility tool that we have at traders.com and look for the buy zones and know where to put the stop. So now the issue is, am I correct on direction? Oh, I don't know that, but I do know what I intend to do, and I do have data to make that determination of up or down. Here's the Dow, by the way, if you want to see those numbers. See the implied 4-hour low? Great. Or using the technical analysis that I just went through, right? Let's see if it'll let me pop this. I don't think I've ever tried popping. Yeah, okay. Here's the Dow on the hourly chart. And this is the higher high that I talked about last night. So then you'd expect a higher low. And I said, well, what you want to do is look for a new direction. Okay? So when you make a higher high, you expect a higher low. Then it makes a new higher high, right? So what do I teach in the training course? Then you take this old high and drag it across, and there's your new buy zone. Then it makes a new higher high. So what do? Look left, drag it across, that's your new buy zone. So now we have a new higher high. So what am I going to do in the future? I'm going to drag this across. Oh, that's my 1 hour implied low. So I have a trade like that could be lined up. And then if it does that, I'm going to do this. Okay? And we just rinse and repeat until we run out of room. Did anybody find that helpful? To me, the process is most important. I don't know if I'm right. So therefore, instead of me coming out as someone like, let me tell you how to trade, let me tell you how to be right, I'm a genius so I can predict these things. No, it's not about prediction, it's about process. A reliable, repeatable process. Cool. Oh, well, thank you, Angel. I appreciate that. Yields coming down, that's good. Bitcoin crossed 90. Oh, my lordy lord. Holy smokes. Just kind of eyeballing everything. Look at gold on with the 9. Yeah. Euro dollar. Beautiful, huh? That euro dollar is looking lovely. Do, 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 do. Okay, 4 hours down on euro dollar. And guess what? We're in a buy zone, baby. Now, guess why it's coming down? So we talked about this again in yesterday's technical group. What does that mean? See, now it's technical versus fundamental. Technical, it says one thing. Fundamental says another thing. It's not that they disagree. It's timing. So let me ask the question differently. When we hit this zone right here, does it suggest the next candles are up, or does it suggest the next candles are down? Down. Down. Profit taking. So, no sellers. So, if the buyers come back to the market, they'll do it here or they'll do it here. Okay? The issue that I'm trying to point out is that this is, okay, this is an obvious profit taking. The reason for it is the trade plan for the week was buy it here and exit there. It's even labeled bullish profit zone aggressive. The highest high you could possibly expect logically for the week was achieved on Monday. Traders made too much money too quickly. In that case, they're going to take profit and they'll probably re-engage. They'll re-engage on the roll reversal, 21 EMA. Or it can come down as much as the central pivot point, which is right there. So I don't know which one, so I would start here. So today's move, you want down to up on euro dollar. Oh. So like, for example, let's get that out of the way. And I'm going to mark this twice and then drop into a small time frame. Check this out. If you are a bull, okay, bullishness does not exist on this chart. There's nothing on this chart that's bullish. This is a pivot point and the 4-hour 21 EMA, which is bullish. So if I'm a bull, this is a setup for my plan A. What I'd like to see now is bullish trading patterns that can get me long. They don't exist now. However, maybe in the future. So I sit and I wait. Now I can sit and wait, or I can have a machine do it for me. So let's do that. Heck yeah. So, all right, TRADARS, show me when euro dollar turns bullish. Okay. I'm going to get rid of these and those. Okay. All right. This says vulnerable on a higher time frame. This says bearish on a low time frame. So if I was trading only the 4-hour here, I would say it could fall a little lower before we take it north. So maybe it's the second, maybe it's plan B. When I look at here, support breaking is not a bullish opportunity, is it? No. Cool. So maybe I wait. Now the cool thing is I can just sit here until I start to see bullishness. And then if I want to be a bull, I can engage. Now, doing it this way is interesting because we're using, let's say algorithms to look for the top 20 patterns. And of that, really, we're taking out a bunch of the patterns and we're trying to get to, let's say, let's dumb it down. Let's say it's, let's say top 12 reliable, repeatable patterns. Okay. And then we're filtering that down to long only. Okay. Okay. So now you will only engage a long only euro dollar position because you want to be a bull on euro dollar based on macroeconomics and sentiment and some technicals and all that kind of stuff. So you're long only, and you're only going to look for the most reliable, repeatable patterns. And the algorithm's great at spotting those. They're either forming or they're not forming. And these are not what you're looking for. So you wait. Patience and discipline. Isn't that nice? Oh, it's so nice. You know you like it. So now you just sit and you wait. Let the machine do the work. Imagine how reliable and consistent you become. Okay? Reliable, consistent, right? When you're only trading real patterns. You guys having fun? See, you just sit here, let the machine do the work. Now, no. Now, no. So if a bullish pattern appears, it'll show up on a 15-minute chart or a 30-minute chart or an hourly chart or a 4-hour chart or a daily chart. And we just wait. How do you get on TRADARS? You go to tradars.com and insert a credit card. Pretty simple. The new thing is we have a rebate program, which is now, so everything under the rebate and prop fund tabs is going to be changed. A lot of it's going to be changed today. We were setting things up based on what we had done in the past, but now legal and compliance has gotten involved, and they're like, yeah, no, we can't do that. So we've been working really almost a month now. Yeah, actually a full month with legal and compliance to get things sort of squared away properly, tickety-boo. Okay, and so there's some big changes coming, but one of them is I think we could almost call it a double rebate program now, because as you trade, I'm going to give you a cash rebate to make TRADARS cheaper or even free for you. But then as you trade, we're also going to give some of your spread back, so it's cheaper to trade. So you have extra money to trade with. You keep 100% of the profits. You get a rebate to make the service, let's say, hopefully free. And on top of that, each trade is cheaper to make. So, but some other things I'm going to have to change that you might be a little disappointed in, but I think that's offset by other sort of wins. But the thing is, we have to be compliant. I mean, we have to do it right. Okay. This page, I believe you have to refresh yourself, but like under like implied vol, this tool refreshes itself. So they all use different technologies, right? And so these right now, you can see these are the things you should be focused on trading right now. And you're like, dude, everything has high implied volatility. Yeah, well, it's the New York Stock Exchange Open. So yeah, everything's good right now. But throughout the day, things start to change and it says, trade this, not that. So everything's good right now. Look at that. Everything's good. But that's not always the case. So, you know, this changes every 15 minutes. It updates the hourly, the 4-hour, and the daily. Because it's not like today, it's the next 24 hours. So again, like look at Euro Swissy. Let's say you're a bull. Okay, you should know that this is a buy. If you are a bull, I'm not saying you should be. I know what I am. But let's say you're a bull. Cool. Then where's your implied buying zone for the day? Here. Where's your stop placement? Okay? Below here. Now, is it because of this? No. No, this has nothing to do with that. This zone has nothing to do with the price action. Nothing. So, the implied vol may have created the price action. Let me explain what that means. To get these calculations of the daily low, which updates every 15 minutes, so it's the next 24-hour low, the next 4-hour low, the next hourly low, it looks at many Tuesdays at this time of day. That's it. It's not doing any technical analysis. It's just saying, based on Tuesdays, this time of day, so let's say the New York Open, if you look at the hourly lowest low, the 4-hour lowest low, and the daily lowest low on Tuesdays at this time of day, it's very rare if the market is bullish. Now, it doesn't calculate if the market's bullish or bearish. It calculates volatility. So it looks at the highest high and the lowest low. So if you are a bull, in this time frame, it doesn't often go any lower than that. And on the higher time frame, it doesn't often go any lower than this, the daily low, which means based on what has happened in the past, this market would have to totally collapse. Totally collapse. For something like that to happen. So if you're wrong on direction, okay, you're not going to do well. But if you're right on direction, sort of statistically speaking, it'd be very rare to have a pullback that low. So you can think of it as you probably won't get knocked out if you're correct on Euro Swiss franc direction. Now, how do you get Euro Swiss franc direction? That's called fundamentals. So if you're correct, then this dip and that high is what is likely to happen. Now, we also know we're about to lose some volatility until the New York close. Okay? And then there's a little vol around that. And then we wait. And guess what? Asia doesn't trade Euro Swiss franc. So nothing's going to happen to this thing during Asia. What happens at 3 o'clock in the morning, New York time? London opens. Guess what? Europeans trade Euro Swissy. No kidding. Really? Europeans trade European currencies? Uh-huh. Oh, well, that makes sense. Of course it makes sense. And then it fizzles out. And then we front run the New Yorkers. So realistically, this is our high in the next 4 hours, and this is our tomorrow trade. So it'll probably work out like this in the next 18 hours. Bravo! Bravissimo! Dude, we got the data. We have the data. This is not random. Dude. So what if through our rebate program, you got all of these tools and they were either free or cheap? Question is, would you use them? Or do you want to keep trading like an amateur, just being random? Guessing. You like guessing? Well, okay, what can I do? I can't help you with that. You're like, okay, everybody likes, right? Look at sell Aussie, sell CAD. Uh-huh. So anyways, pretty cool stuff, huh? Yeah, for sure. Oh, I'm out of coffee. What you gonna do? Rupp is not afraid of you. Beat his for no, right? All right. Let's take Biddy out of the equation. Okay. Russell S&P 500 and Dow are all up. It's 7 o'clock this morning. We met at TRADARS, and it had S&P 500 down, Dow down, Russell down, based on what happened yesterday. And I had suggested that today was going to be an update. And they all went from negative to positive. Look at that. Nice. Gut. Das gut, ja. Cool. Let's read some articles. Look how negative pound yen is. The biggest loser is pound yen. The biggest winner is Eli Lilly. USD Swiss franc, a loser. Euro pound, a winner. Gold, winner, winner, chicken dinner. Silver, nice. So silver was ugly a little bit. Why don't we look at some silver? By the way, I wanted to remind you before I change it, this is a 4-hour 21. If you don't know that on a 5-minute chart, you can't trade a 5-minute chart. It's not that you can't handle the truth, you don't know what the truth is. All right, so I wanted to zip over to silver because, oh, look at, man, we just nailed this Bitcoin, huh? We had it as a buy around that 70 to 75 zone, right? You have this as the role reversal, which ended up being 75. And we have it going up well over 100,000. And we're at 90. We went from 75 to 90. Good. All right, so silver has been a little bit ugly as of late. Okay, it was way down here. And so when we look at sentiment, you want to look at the silver sentiment here. Okay, and it was not good. In fact, we were down at negative 20, negative 25, negative 29, negative 23. Okay, at the beginning of the month. Is that right, eh? Yeah. Negative 28 at the beginning of the month. Let's go to the back tester. Okay, and X silver. Okay, let's take a look. So there was a little bit of overlap with that sentiment. Then we turned somewhat north around the 6th. We got to a 9. Wow. 6 to 9. Okay. So on the 6th of April, we went from bearish to bullish. That is the 4th. The 4th and December. So this is the date TRADARS looked at 8 different variables on silver and turned bullish. And then we go back to the sentiment. XAG. And sentiment was still very negative. So what I'm trying to say is macroeconomics suggested bullish in here. Let me do it this way. I said the 6th, right? So in here. Oops. Okay, in this zone here. Now, market sentiment was still bearish, but macroeconomics was bullish. Isn't that cool? Leading to a breakout, pullback, and now maybe continuation. Okay, so we were negative 25, let's say, and now we're positive 25. We went from here, this is neutral, to now bullish. In particular, just recently. But it started down here. Isn't that cool? But it hadn't been written yet. So I think what tends to happen is those that write for the media have similar tools, let's say, and they're using fundamentals to decide the outlook for silver. So they see it here, and then they start writing about it, and then, okay, more and more, this is showing more and more media authors writing positive reviews. See? Positive reviews for buying silver. But if you have the tools, you can see it before it's been written about. So you're like Bud Fox following, right? Sir, what was his name? Sir what? The Englishman that had lunch at Le Cirque with the bond trading team. And they're like, oh my God, they're going to buy Caldecott steel. And so as soon as what do they call them? The Wall Street Chronicle starts writing about it, then everybody starts buying it. Well, you want to know before the media. So think of it this way. You know here, the media starts writing positive things about silver, and then silver starts going up. Why? Because people that don't know are responding after the fact. So now they're just starting to buy, but you would have been down in here. You see? Sir Lawrence. Yeah. Thank you. So I want you to have the data. I don't want you to wait 1 or 2 days after the fact because you read it somewhere that you should buy silver. So now you've decided based on someone else's opinion that you should buy silver, when you can clearly see professionals bought silver because it made logical, intelligent, it made sense based on macroeconomic analysis. And then people buy it later at a much higher price. You buy it first, and then they buy it and drive the price up higher. I want you to be the one that is making the decision, not a journalist major at an online website. So anyways, that's that. Let's go back to our opening chart. And we've kicked some mighty ass today. That's how you do a market open, using implied volatility. Peace on earth. May the pips be with you. May your profits be above average. Have a great day, y'all. All y'all. That just happened.